Hello, welcome back to today's class. So today we want to talk about price structure. Remember, we've already finished on market structure, took out some examples, and here we are. Today now we are talking about the price structure. So technically, the way we said market structure is the behavior of the markets. Now price structure is actually the behavior of the price. Whatever is happening to the price is dictated by the price structure. So on price structure, we have three key things in the market. Number one, when you are selling markets, when we are talking about the price, we are saying that price is dropping. Okay, so we call it a drop, and it's labeled as D in the market. Then when the market is actually buying, we call it, this market is rallying. Rallying meaning it is going to the upside. So we label this as R. And then now from there, we have when the market is actually, or rather when the price is consolidating, we call this base. Base meaning anytime the price is actually consolidating, it's moving around the same zone, or rather the same price. So the market is creating equal highs and the equal lows. And then when we are now looking at it, when it comes to the price, now we call it base because very small candlesticks are created in that particular market. So under this now we have different types of market structure. Number one, let's first talk about when the market is actually continuing. So continuing meaning that price is actually buying, or when the price is actually selling. So let's start with the continuous market, or rather when the price is continuous. So it's continuous price. So this is how this looks. So the price will do this, rally to the upside, give you a bit of consolidation, like this, and then the price continues to go up. The price can also do this again before it continues to go to the upside. This is an example of when the price is actually giving you a rally. Then we have now when the price is actually selling. So this is an example of what happens to the price. Sorry, let me delete that. This is what happens with the price. The price consolidates a bit at a certain level, like this, and then to the downside it can decide to continue also consolidating like this, and then to the downside like that. So now let's start with this one. When this price is behaving like this, it means it is giving you a rally, a base, and then again a rally at this particular point, rally. So now this one, when we are labeling it, it's called a rally, base, rally. Then when the price is moving to the downside, or rather when it's selling, so here this will be a drop, base, and then a drop again at this particular point. That is a drop. So technically when you are labeling this market, or rather this price, it's drop, base, drop. Why? The price was dropping, it gave you a bit of consolidation, and then it dropped again. Consolidation, dropped again, which we are calling it base. This is when the price is continuous. Now we have when the price is giving you a reversal. So reversal, because remember, not every time the price will just be continuing like this. So number one, we have when the price gives you a sell, a bit of consolidation at a particular zone like this, and then it buys. Or the price does this, the price gives you a buy to the upside like that, gives you a bit of consolidation like this, and then what happens next? The price gives you a drop like that. So now this we call it a drop, base, and rally like that. Then the price can also give you rally, base, base, and a drop again, drop. So technically we are calling these markets drop, base, rally. Or we have this other one, we call it rally, base, drop. So this should have been drop, not base. So we label this as drop, like that. So these are the only 4 price structures that you'll ever find in the market. Number 1, when the market is continuous, giving you rally base rally, or drop base drop, or the market gives you a reversal pattern, which is drop base rally or rally base drop. So now I want us to go ahead and look at what actually pairs gives you, where you use price structure, and also see more examples. So let's meet in the next class. We talk more about now how now do you trade when you have price structure.